Good morning, traders. It's 8:01 a.m. on Tuesday, the 9th of February, 2016. This is another Trader Bite, early nourishment for your trading mind. Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not indicative of future results. Fair amount of news overnight. Oil is just looking at sentiment overall. Oil is down 0.9%. Gold is flat, which is surprising. U.S. Treasury bonds up 0.24%. Tens up 0.19%. These are Treasury prices. The Eurozone Bund is flat. The Asian markets at Nikkei took a large hit at negative 5.4%. The Hang Seng up 0.5%. The Shanghai is closed. And the Japanese yen jumped up 68 bips last night. Eurozone equities, the FTSE's down 1.42%. The CAC 40 down 2.53%. The FDAX is down 2%. U.S. equities down 1.15% after that large rally into the close yesterday. U.S. dollar index down 47 bips. Overall, the sentiment is firmly risk-averse, flow of capital overnight. Yen is the strongest it's been since November 2004, as money flows out of equities into safety, into the actual yen. The Japanese stock market fell 5.4%, making for the biggest daily drop since June 2013. Weakness in stock caused safe haven buying of the yen, which strengthened to 114.21 per dollar. The strongest we've seen it since November 2014. Japan's also become the first G7 country to see the yield on its 10-year debt fall below 0%, finishing at a record low of 0.035% negative. The IEA is warning participants that the bottom of oil has not been seen yet. They're saying that inventory remains very high and demand is not picking up at these lower prices. To top that off, Morgan Stanley issued a report cutting its price forecast for oil from $50 a barrel to the high 20s. Welcome to the party there, Morgan Stanley. Barclays, on top of that, put out research that found demand for distillates is indicating trouble ahead. Demand for distillates has fallen 18% year on year, a level which has only been seen during recessions. The warm winter weather is not helping on that front. Also, Deutsche Bank, which is the largest commodity trading institution in the world, saw its shares accelerate to the downside. Deutsche Bank had posted a loss of over $7 billion in Q4. Stock is trading at record lows. The CEO issued a statement to employees saying that Deutsche Bank is rock solid and that it is making payments on its Tier 1 capital debt. So a lot of spooky stuff being put out there right now. Looking ahead at what's on deck for today, we have wholesale inventories at 9 Central, 10 Eastern, expecting negative 0.1%. At the same time, we have the U.S. JOLTS job openings expected at 5.350. And as far as speakers, the calendar is clear. After the market, we get Disney at $1.45 per share. So we flew through that pretty quick. A quick look at what was anticipated yesterday. Again, the market is definitely a little bit more challenging to trade. The anticipation yesterday is that it would open in a gap just like it did. It opened down here at 51.50. The expectation was for it to dip down into the overnight low, which it did, and then to attempt to push higher towards that 1865, which is a pretty big resistance level at this point. It was a multiple low on the daily. prior, so multiple support. And then the expectation is that it would chop around up there and then rotate down to 35.50. The market instead opened, had a small uptick, just 4 ticks, and it rotated down, which was hypo 2, rotated down to 35.50, and you could see the bounce back up to the mid, and then it continued to rotate down back up to the mid, and then it finally got to the 22 area at 1821.75, from which we had a very strong rally into the close of about 33.25 points. The market finished neutral yesterday, which was not expected. The probability for neutral is pretty low, especially in this configuration. Generally, if the market does not start filling the gap or rotating upwards right after the initial balance has been put in, then what you have what's called initiative behavior, which means the market will likely continue in the direction of the gap. That's an upper 70% probability. And so overall, the picture yesterday was clearly on the short side. The control was clearly on the short side until the close. And then once it got through the mid on the retest here and pushed through, neutral was the next objective, which it got by about 2.5 points before it fell back into the initial balance. Overall, the profile yesterday was pretty fat for a selling day. We did not have a long liquidation profile. The market traded these prices very thoroughly all the way through. So what's happening here, what the profile is showing, is that the market is seeing value as price goes down. The market's seeing value in participating with the sellers and is buying the market up, even though the sellers are overcoming the tide. The force of the sellers is overcoming buying in the short term. There's a lot of volume going off. The buyers are not backing off. They're seeing value in these prices here, and actually I see it in my order flow software as well. I see a lot of lifting on the offer on the way down, and a lot of icebergs and things like that are operating on the buy side. So overall, the market's very strong, finished very strong. My expectation, given the way the market closed, is that we will likely continue higher in the overnight session and start moving towards 1865. That's how I left the session yesterday when I was done with the trading day. Given the way it closed, this was a pretty strong. Found our buyers down here, and so the expectation is we continue to seek sellers as we push higher. And unfortunately, Asia put a cap on that, and we did not quite get to the levels, the upper levels that would lead to a strong sell setup. Let's look at the overnight. So here's how things shaped up. Overall, the market just drifted downwards on the Asian session. It did start to move up on the European session. It made that high, and then it sold off from there. The profile overnight is looks somewhat long liquidation style. The low was just pushed here recently, just before the trader bite started. And we do have a fairly weak low. We've gotten down to the value low of yesterday, value low being 1827. 1829 was a key area from the 21st. It is a low volume node from back then that was very clear, very prominent. And then that low volume node started. Let me take you to it actually, just so you see what I'm talking about. It's very important to look back and template the days that we may be trading. So here it is. This is the big rally, the 65-point rally from the most recent low at 1804 quarter, and right here 1829. So the way this day breaks up is we have the largest volume distribution in the middle, which formed that 1835.50, which we took out yesterday. That was the naked point of control. Once we got through the 1835.50, the next target down became 1829. Once 1829 is taken, then we start to look at 1822, 1820, which is this high volume node right here, and that clears us all the way down to about 1816. That's the next cutoff point. It's arguable actually, 1816 to 1810. I really like this 1810.75. It's an LVN from the rally day. It's where the power behind this rally came in, and it's a high volume node on the composite. This is a major target now as the market stays below 1829. So you can see here on the composite, as the market stays below 1829, 1810 becomes the primary target on the downside. So if the market's not able to find buyers as it rotates down, just like it's doing overnight, then the most likely next stop would be 1810.75, and that's my key target below for today if we continue to the downside. So we're opening in a gap again. However, incentive with this bad news coming in from Asia and Greece and so forth, and the European banks to continue to push lower. So the expectation is we expect intermediate time frame players to step into the market and give us some pretty big rotations on the open as we sit here in value. But the overall, if the market is unable to get up into the 1845, if it cannot take out the 1845, then I'm going to look to pound on the short side for the 1810.75 as the primary hypothesis for today. This day kind of sits on its own. It's in a vacuum. It's got I haven't marked it yet, but it's got a gap zone above, and it's got the low, the most recent low below it. And if we look at the daily chart, I know I'm saying a lot here, but there's a lot going on. If you look at the daily chart, you could see that the pattern that's been created is this is an excess low, meaning that the prices were too cheap and the market got really aggressive with the buy side, and that gave us the energy to shoot up. And what we've done is we have turned over and we are attacking this excess low, so that leaves the 1804 quarter vulnerable, and it takes that 1930 target above off the table for now. We are moving away from the point of control at this point. You could see that we opened below the composite value and we're unable to get back into and test that value area on the composite. We are stuck in this low volume pocket, and the next key area again, I'm going to say it again, 1810.75. That's how things are shaping up. I want to remind you that doesn't mean you sell at the open and you hold on for dear life. That's not the plan. The plan is just to see who is taking control on the open. Are buyers able to make headway and push into and through this 1839.50 towards 1845? I will likely take my initial short in the 1845 area if I can find a price action pattern to get short or some order flow pattern to get short. If I do, then I'm looking to get short here to aim for this overnight low. If it opens and it immediately shoots down, I'm going to be paying very close attention to whether it turns back in. If it turns back in, then we're likely to close the gap up above. If not, then it's likely to fall through to 1075. Notice what I'm saying. There's nothing definitive about what I'm saying, and the purpose of that is not to say that I'm trying to be wishy-washy and I'm trying to be inaccurate with my assessment so I can say I'm right both ways. I couldn't care less of whether or not I'm right. I'm here to flow with the market, not to be right. So the idea here is to make sure that you always keep your mind flexible. So a fixed mindset in trading is a very, very poor mindset to trade with. That's why I don't use words like it must, it needs to, it should, it has to. We don't use those terms because it creates a fixed mindset, and then our brain is only focused on those details that support that fixed mindset opinion, that attitude. My mindset instead, and I've been doing this a long time, so I think you might, I think I'm qualified to say this. Um, my mindset is just to flow with it. Think of trading as a lot more like surfing than it is about running down a bobsled track, Olympic track. It's not a set course. It's much more about reacting to the waves and finding out where the dominant force is, and then being ready to paddle and jump on your board and take advantage of the bigger waves that come along. We don't know where those are, and it costs money to find out. But overall, we wait for the market to decide what it wants. We look for who is in control. We try to identify to the best of our ability who's in control. We do that by identifying the opening type, identifying the opening swing, and looking at the initial rotations. Which rotations, that's these numbers here, these little numbers that you see, these are all rotation markers. Which rotations are um, which rotations are stronger, the ones moving up or the ones moving down, and that's an indication along with volume. That's an indication of who is doing some serious business in the market, and we want to trade from that side. We always want to fight from the direction of strength. So that's really important for you as a trader. Good luck, and I'll catch you tomorrow. Take care.